Welcome to The Explainer. Today, we're breaking down a really dramatic day on Wall Street, January 7th, 2026. This was the day a presidential policy announcement went head-to-head with the technological revolution. And believe me, it literally split the market in two. I mean, just look at this. The market sent two completely opposite signals. You had the Dow Jones, which is, full of traditional industrial companies, plunging almost a full percent. But at the same time, the tech-heavy Nasdaq actually finished in the green. A total head-scratcher. So how on earth is that even possible? How can the market be in a nosedive and soaring at the exact same time? Well, to get it, you have to understand this was a clash of two absolute titans, a policy shockwave coming out of Washington versus the relentless, unstoppable force of AI innovation. Okay, let's dive into this, because the whole day really was a battle between two massive centers of power. On one side, you've got policy announcements from Washington, D.C., and on the other, you have these fundamental breakthroughs happening out in Silicon Valley. So the first shockwave, it came directly from the White House. And it wasn't some long, drawn-out policy paper. Nope. It was a series of pretty unexpected social media posts that took direct aim at specific industries, and it caught investors completely flat-footed. The message was incredibly blunt. Just one sentence, aimed squarely at the big institutional landlords, the giant firms that have been buying up single-family homes. And bam, that single statement sent immediate shockwaves through the real estate and asset management worlds, kicking off a wave of panic selling. And the effect? Yeah, it was instantaneous. You can see it right here. Companies like Blackstone, whose entire business model was now directly in the crosshairs of this potential policy, saw their stock just plummet as investors scrambled for the exits. But the attack didn't stop with housing. Oh no. The administration also put the entire defense industry on notice, directly challenging how they spend their money. They threatened to ban dividends and stock buybacks for any company with production delays. For giants like Lockheed Martin and Northrop Grumman, that basically vaporized one of the key reasons to own the stock overnight. So here's the bottom line on that. This policy-driven fear, it was powerful enough to drag the entire Dow Jones Industrial Average down by 466 points. It completely halted the Dow's big charge toward that historic 50,000-point milestone, stopping it dead in its tracks. But while the Dow was bleeding red, a completely different and way more optimistic story was playing out in the world of technology. The counterpunch to Washington's policy jab came from the floors of the Consumer Electronics Show out in Las Vegas. This is where one iconic company unveiled an absolute game-changer that reminded everyone where the future is really headed. Intel ripped the cover off Panther Lake. Now, this was its first real product built on its super advanced 18A manufacturing process. And this wasn't just another chip, okay? People were calling it a potential 10-year leap forward. It was a massive signal that the semiconductor giant might be back in a big way. And investor confidence, you could feel it. The market didn't just notice this, it absolutely celebrated it. Intel's stock surged over 11%. Traders were rewarding this huge sign of renewed tech leadership. So this powerful AI story, right, it was driven by Intel's big comeback and the continued belief in huge demand for chips from companies like NVIDIA. And it basically acted as a firewall. It propped up the Nasdaq and single-handedly prevented a much broader, way more damaging market sell-off. So you've got these two massive forces pulling the market in opposite directions. You have to ask, what was the actual economy doing underneath it all? Well, the data that came out that day gives us some really important clues. The economic data that day was, honestly, kind of confusing. On the one hand, you had the labor market numbers, like the ADP jobs report, and the JOLTS report, which tracks job openings, and they both showed a clear cooling trend. But at the exact same time, the ISM Services PMI, which is like a health check for the service side of our economy, came in surprisingly strong. It was showing robust expansion. Now, this weird mix of data, it actually calmed fears that the economy was overheating. It was this perfect cooling, but not collapsing, scenario for the bond market, and that pushed down long-term interest rates. And for tech companies, whose value is all about future profits, lower rates are like a powerful tailwind. It makes all that future money they're going to make even more valuable to. So, what in the world does all this mean for you, the investor, trying to make sense of the chaos? Well, the day's wild ride really suggests that two very different playbooks are starting to emerge. Okay, path number one is the aggressive play. This is where you lean right into the AI revolution.
It's a bet that fundamental innovation is just the most powerful long-term force out there, and it's strong enough to overpower any political noise. The thinking is that the global demand for more computing power and automation is just an unstoppable train. The big risk, though? It's all built on the idea that the giant tech companies keep their wallets wide open and continue spending big.
The alternative is a classic defensive move. This strategy is all about finding stability when politics is creating chaos. Healthcare, for example, benefits from long-term demographic trends and isn't so tied to the ups and downs of the economy. And energy infrastructure can provide really predictable, almost utility-like returns. You're basically trading the explosive potential of tech for the reliability of sectors that are pretty well insulated from these specific presidential policies. And all of this leaves us with one final, really provocative question that's probably going to define the investment landscape for a while. When that unstoppable force of innovation meets the immovable object of policy, who ultimately wins the battle for the market's future? The president or the processor?